What's up, traders? Matt from the Trade Brigade here with your broad market analysis for the day. We'll cover SPY, the Qs, and IWM in that order as always. On the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First one up on the chopping block is SPY for the S&P 500. On the daily time frame, you can certainly see a bearish close, large red-bodied candle closing down at the lows. However, it is above an area of support that we've been eyeballing around this 450.31 level. So, is it the end of the world? Absolutely not. This pullback is actually welcomed in the current market environment. I would also point out that there's been a slight uptick in volume. Obviously, a majority of that came from the market on close orders in the last 30 minutes of the day. You can see that huge volume spike, which is skewing all of our other data. Regardless, all I'm getting at is, it was a fairly weak close. So we'll read into that on the 30-minute in just a second. But in terms of daily pullbacks, I will stand by the deepest that I want to see this at this point in time is 446. And with this weak close, it does look possible that into the remainder of the week, we see a little bit more follow through and maybe that level is achieved. It's not a guarantee, but again, closing weak on the lows might be an indication that, hey, maybe some sellers are starting to come in here. The question is, though, are those sellers strong? And if we look at the 30-minute time frame, I would start to make the argument, no, they're actually not that strong. Reason being is that the sell side activity really only happened in the last 30 or so minutes of the day. To me, it strikes me that anyone who is trying to build along up here in those 2 days of consolidation and balance, they got burned, right? There was no payday for them as we were just grinding around this morning. There was no lift. All of these people start to become disappointed. Maybe there's some people that are folding, essentially long overhead supply that closes their position when they realize, okay, we finally filled the gap. We didn't hold the spike base. It's time to kind of bail on the longs. We had the worst trade location up here at the highs. So to me, this doesn't seem like long-term sustainable selling. It seems like a panic from those who had the worst trade location up at the highs. I'll quickly bring up our market internal screen just because it is worth looking at here. Notice that the internals throughout the course of the day, very benign until the selling actually started into the close there. We were not even slated to be closing underneath negative 200 million before that impulse sell came at the end of the day. So I would say that the volume ratio was fine out there on the day's session. You'll notice the advanced decliner was actually positive for a majority of the day, only barely dipping negative on the sell into the close. And the same thing with the ticks. Just look at the cumulative build here, fairly flat. I'm not going to say it was a completely bullish day out there, obviously, but it certainly wasn't bearish, right? So in terms of all these data points, it does strike me that the SPY saw a little bit of liquidation break type activity into the close, and we'll see if we retrace that 100%. If we do come back up to the scene of the crime, aka this level right around 456, I would call it, I would chalk this up to, yes, liquidation break, taking short-term sellers out of the marketplace. It's a lack of longer-term sellers. That's a bullish thing for the marketplace. And again, if retraced 100% up to where the sort of scene of the crime started, I would look for higher or just more healthy bull flag consolidation to form up around some of those levels we've been discussing. In terms of my downside line in the sand, I think I mentioned it earlier in today's video, but 446 is my number into the end of the week. I don't want to see that violated to remain optimally bullish on this pullback here in the SPY. Anything deeper, we do have 441, but at that point in time, we're starting to get close enough to that 50% retracement where I'm not overly confident that, it's going to be just an easy ride back up towards the top. Okay, so there's the Fibonacci perspective. And again, 446 is still above that 38.2, so a little bit of wiggle room down here, but nonetheless, I don't see anything overly alarming yet with our SPY chart is what I'm getting at. This is a reasonable pullback in the face of a screaming market to the upside. I mean, guys, it was bound to happen at some point in time, right? We've been talking about the risk that's out there. Now that this pullback's unfolding, that risk is decreasing, right? So look at it in a positive light, especially seeing it in such a bullish rally here. So those are my thoughts on the SPY. Let's continue along and talk about the QQQ for the NASDAQ 100 ETF. What do we see on this chart? It certainly filled its gap much sooner than the SPY did. The SPY closed it, later on in the day, but this one closed early in the morning. And sure, we did get that spike into the afternoon session there, which is, again, a reason for a bearish close. Obviously, we're breaking this one time framing to the upside. That trend line is no longer really intact. My level is going to be here at 357.56 for optimal pullbacks. I suppose it could actually be a little bit lower in our QQQ. 352, I believe. That's actually, that's going to be the level I would use. Okay, so 352, this one might be a bump in the road, but as long as we're above 352 in the QQQ, things in my estimation will be A-okay, noting that if we take out the fibs from high to low, there's your 352 aligning perfectly with that 38.2. So yes, use that level in here for downside targets. This will be the first area around 357.56. Again, just like in the SPY, be on the lookout for any hammer candles that print, any sort of indecision dojis, anything that would signal, hey, the selling is subsiding here. This is actually just nothing more more than a healthy pullback, it's long over those highs, retarget the equal high, and then monitor for continuation of this trend reversal that we've seen so far. Stop goes underneath wherever those reversal candles print, right? So I'm starting to look at this pullback in a positive light, finally giving us something to work with across the marketplace. What else can we learn about the 30-minute time frame activity that we've been seeing here? Well, just like in the SPY, again, the selling really only came in hot and heavy into the last 30 minutes or so of the day. You can see we had a flush point, lower highs coming into it. We break it. That's where the sellers are attracted. But, the market didn't really have enough time to determine whether or not that was fair. In market profile terminology, we would call that a spike, right? So that will be something to watch out for tomorrow. Is what happens on the back test of the scene of the crime area. Again, just like in the SPY, if this retraces 100%, we start getting some acceptance here. That to me is nothing more than liquidation break. Again, as I've went through my spiel, that would be something that strengthens the market instead of weakens it, and we should look for trend continuation over the course of time. Levels to the upside, if there is just a turnaround and we don't come into this, obviously, again, your back test, let's go ahead and throw that on actually so we're aware of it. That's going to be at 364.62. Anything above that, your double top high is going to be back in play around 369, 370 for round numbers sake in our QQQ. So those are the levels. Those are my thoughts on the selling activity that we saw. Again, strikes me as liquidation break type activity. Next and lastly, we have IWM. What's going on in IWM? This is the one where it's slightly more concerning. We talked about this in the midweek market update over on the main channel yesterday. And the reason being, and why this is slightly concerning, is because we're back down underneath 208 after a failed break now of this bull flag. We also remember that 208 is the critical weekly pivot point. It's also the double bottom, weekly neckline right here. We started to break it after a nice consolidation period, and it didn't materialize, right? There was no bullish close back inside the area. As a matter of fact, it's been a look above and fail now back into the range. It doesn't strike me as too promising, to be quite frank with you. It does need to hold on to 204. If that happens, you could make the argument that yes, we are still putting in higher highs, higher lows. That's fine. But in terms of structure, this is not an ideal way that this chart would have unfolded. You would have gotten price acceptance above 208, done something like this, balanced up here, and maybe went higher after that. But now that we're firmly back down underneath, the chart's going to be much more difficult to read, and it actually carries slightly more bearish implications, noting that the buyers were not able to keep it up above that area. So on breaks of 204, start looking for lower, probably looking at this 201, about a 3-point range to trade for, and then the 50 SMA will be coinciding. That's the blue line on the chart, of course. After that, the support trend line, yes, it will technically produce a higher low from this perspective, but again, this fake break, in my estimation, carries much more bearish implications than it outweighs rather the bullish implication of putting in a higher low at the trend line. Like this failure is much more monumental than, okay, yeah, we put in some sort of bounce for a higher low. It's like, at the end of the day, 208 really should have held if it was going to be more of a risk-on type environment for equities into the remainder of the week. I mean, look at the range. We poked back above, there was zero acceptance, and we're right back down below. So to me, not that promising. In terms of the 30-minute time frame and what we can learn about the intricacies of the intraday trade here, just like everything else we've discussed, a little bit of a spike into the afternoon. Again, it strikes me as liquidation break type activity, but the fact that the location is so important underneath that 208, and we were still getting acceptance underneath anyways earlier on in the day, is much more concerning than what we've seen in SPY and the Qs. So use this as a bit of a reminder that maybe it's not all rainbows and butterflies yet with this rally here, noting that small caps cannot get in gear, and generally we do look at small caps as some sort of risk on type indicator. So that's what I've got for you on today's video. Again, the market sort of pulling back respectfully in the SPY and the Qs, but this one certainly has me scratching my head a little bit saying, okay, is this actually not as good as we think for the equities market as a whole? It doesn't have to be the end of the world. Obviously, if the SPY turns around and gives us a nice higher low and this continues to dribble sideways, fine, it's not the end of the world. We're never leaning on one singular data point so heavy where it's going to make, our other trades invalid, but it is kind of a head scratcher is what I'm getting at. So to wrap things up here, let's quickly go back and over to the SPY, just because I do feel like it's worth closing on this one, especially given today's context. Treat today's afternoon selling as a spike. We don't necessarily know whether or not this is going to be accepted by the market. So tomorrow morning, there's going to be a couple of things to watch out for. We're going to talk about them on the pre-market live stream over on the main channel. But if you don't tune into that, watch out for this, okay? If we open anywhere inside of this big red-bodied range, look for two-sided trade. The market's trying to find balance in the area of the spike. Remember that we ran out of time today down at the lows to determine whether or not these prices were fair. There was no opportunity for the buyers to bounce it and maybe do something like this. So opening inside of the spike, look for neutral trade. If we open below the spike, look for lower. We're basically, or the market's telling us rather, that we're basically still in search For buyers at this point in time, sellers can continue to push it lower until maybe we find those buyers at our 446 level. Something to watch out for. If we open above the spike, that's the most bullish implication, negating all of the selling activity that happened in the spike. All of these people are dead wrong. Obviously, because we've opened above, those people should start to cover their positions. That would be that 100% retracement as well, liquidation break, strengthening the market, and from there we would look for higher. So that's your summary here on our SPY. Carry that sort of same exact framework forward into the Qs and the IWM as well. That's going to round up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.